whether you're an oil trader or a forex trader or a bond trader or equities. The ability to not marry a side and simply marry a side just because you're marrying a side is incredibly important. But what happens is, as a rule, is the big ability is the ability to execute one side of the trade and eliminate the other side. You'll see that when we end up being buyers, as a rule, the only sell is at a very, very extreme high. And you can see that we were buyers in the overnight session this morning, and then we've executed back into the short trade. So you can see it's been all short trades into the top edge again. So we've eliminated one side. We're not selling it and then buying it and selling it and buying it. If your chart looks like that, if you're selling it and buying it constantly, well, you're not obviously swing trading, you're obviously a scalper by nature. And that obviously is something that either suits you or simply that you've not really realized that that's the case. If you can't eliminate one side entirely on a macro and micro world, then you are basically a short-term scalper trader. So you've got to recognize that that is what you're doing and trade accordingly. So it's been very good. Brilliant trade scenarios. You can see on a macro chart basis, that value is exquisite this morning. Lots and lots and lots of value coming back into that wholesale price. Lots of sentiment drifting off here. And it looks superbly set up. Now, hopefully, for the sake of the bulls and for the sake of most people's pensions, I'd like to see this 41 handle holding. Even though I'm a seller and I'm part of the problem here, but I'd like to see the 41 handle holding. It's not nice when you see the markets collapsing like this when people's pensions are at stake. So I'd like to see that 41 handle holding, see if we can catch a bid this afternoon, see if we get an additional pop to the upside. And with that flatness of the 2s5s curve, which is what we were talking about yesterday when we were looking at the Fed itself, we were talking about that Federal Reserve collapse in the 2s5s curve. We were talking about the impact that that has and how you can start to recognize that on your screens and so on and so on. We can start to recognize just how important it was to see that information so that we knew that the S&P did have some possible strong upside market movement. So again, that big narrative, that big storyline from the day before or from the weeks before allows us to make bigger stories in the right-hand edge of the charts. That bigger overall story, when it fits in with everything else, lines your trades up perfectly. That lining of the trades perfectly happened on the bigger picture on oil this morning, and life was pretty easy for us again this morning. The trade coming into today's market narratives, we simply can see it from let's take it up to a 5-minute narrative here. And you might be saying, okay, so how did you get the buy trade at the very bottom edge? Well, the thing that we were very mindful of was the euro dollar, of course. The euro dollar was giving us a few headaches in terms of getting that supply line. So obviously we needed the euro dollar to sell off to start seeing that supply line being valid. Well, what happened to the euro dollar? The opposite happened to the euro dollar, right? So with the euro dollar bid, you can see the big sell off in the euro dollar yesterday gave us that perfect example of what should happen to oil. You can see we get 1, 2, 3 into a top edge. It doesn't get much clearer than that, does it? It's just absolutely beautiful. So we get 1, 2, 3 into the top edge, and then we get the big sell-off on oil. Now, as we came into the close, you can see there's a bidder on the euro dollar, so there's a seller on oil. Sorry, there's a seller on the dollar, and that's going to provide the bids underneath the oil price. So those bids underneath the oil price, they do not go away. In fact, they get worse this morning. So the bids under the oil price get worse this morning when that started to happen there. So what am I going to do? Well, I've got the RGL, so I'm going to lean against the RGL, and I'm going to make myself an awful lot of money from the RGL narrative. That's what I'm going to do. And sure enough, the RGL was a buy at 96.50. And this morning, we've just traded 99 evens, $2,500 per contract from last night's RGL easy money trade. And that was traded this morning. Bearing in mind that we'd already made this rip higher here last night. And because the euro dollar had started to flatten out during that phase, it was a very easy case to say, right, enough, give me some profits. It takes your money there, and all of a sudden you've just went from 96.50s up at that stage to a high price of 97.50s. You've already banked $1,000. Oh yes, you've already banked $1,000. And then when it pulls back to the RGL, you're in prime perfect position at 7 o'clock in the morning, coming up for the Brent market open officially. This is a great time of the day to do business on oil. And with the euro dollar so punchy, I don't see that I'm going to be able to make any gains to the downside at bottom edges. It doesn't mean that the macro supply isn't still there, but macro supply comes from macro supply areas. And the macro supply area that we've got in the charts is this bearish order block from 99.50 up to the $100 a barrel level. So that macro supply area is miles away. So when I'm buying into this at $96.50, I'm still thinking to myself, I've potentially got $3,000 on the upside here that I want to take advantage of. I've got about $3,000 upside potential here if everything lines up before the macro sellers are going to be coming back into this deal. That's more than enough for me to take a buy side swing at. And that's how we start remembering. The macro traders are going to be at macro trade levels. So we simply know where that is, $99.50 to $100 a barrel. And that gives us huge scope for this. Now, obviously, the downside for us was that this huge scope that we had on this starts to diminish quite considerably as the euro starts giving us a little bit of a topside headache from the buy side perspective. But still, we added to the buy trade 2 occasions this morning, from here and from here. I'm not going to bother telling anybody anymore about what this was, but we added to this trade here at 98.10s. We got up to 98.70, $600 on the first swing, 98.10s, and we got up to 99s again, $1,000 on the second swing. So that was great stuff. Divergence creeping in here, so there's no way I'm going to hang about on this long trade. That's a busted flush now, as far as I'm concerned. And then when we look back at the supply-demand line, we can see what has been indeed happening on this macro scale basis. It really has been a very strong macro sell trade. Now, it's offset, remember, that's the point. There's always going to be offsets. There's always going to be offsets. There's always going to be allowances made. It's like your scope on your rifle. You know, you're lining it up against your oppositions, you know, down 500 yards away, and you're lining it up perfectly, but you've got to have an offset. What's the offset? Elevation, wind, adjustments, so that you know which direction the wind's coming from. You've got to make those adjustments. You make adjustments to what caliber of rifle you're using, blah, blah, blah. You've got to make those offsets. You've got to make those adjustments. And that's the same as this chart here. We know that there is a macro sell level in the background here. There it is. That's quite clearly, obviously, a macro sell there. We know that when it comes back up into that macro area, there was a macro sell there. And the value is still great for that macro sell. But it is a macro sell. It's not a micro sell. The micro sell would have to be zoomed into the charts to see the micro sell lining up with the macros, and then taking advantage of that micro narrative inside the bigger picture the big picture macro narrative. Looking at the dollar in the big picture, you can see why we've had trouble. But when the dollar collapses back out, the euro dollar collapses back out, we are left with an absolute no-brainer opportunity to annihilate oil off of those higher prices. And the same is true of the present moment. So buying up into those high prices certainly is a challenge, and that's why I took my profits at 99 the last time we tested into the 99, because my hope is this afternoon that we get an opportunity to whack some heavy shorts into this. And obviously with the $98 level that I'm aware of, if I can sell above $99 at the NYMEX Open with the euro dollar selling and the supply line still in here, I am going to make a lot of money this afternoon based on that. Now we have to be mindful of, very mindful of any news headlines about Nord Stream again. It's a constantly evolving situation. It literally evolves every day. We've got to be really, really focused in on what is happening to the pipeline narrative. And if there's a story from the pipeline, that could cause oil to go up to $105. So we've got to be careful with this. But my feeling would be that that would probably show up on the calendars before you even see it starting to come in, because there's going to be that short-term demand for oil because it's not coming through our energy products, because it's not coming through the pipelines. And in fact, there is no desire for it to go through the pipelines, and therefore that people will start bringing forward their orders to make up the difference. And that's going to put a demand into the calendar spread, which we currently don't see. So when we don't see that demand on the calendars, I mean, we saw some of it this morning. You can see that little rip higher this morning. And that's obviously one of the reasons that we were able to get a nice buy-side pop on this. But you can see it's kind of drifted back out in the last few hours here since 10 o'clock this morning. It's drifted back out in line with the macro narrative. And that means that into that 99 print at the top edge, we are wanting to get as much short business as we can with a weakness in the euro dollar as well. It is a very strong sell side opportunity to get short on upticks at the moment, guys. Yeah, makes a lot of sense. Makes a lot of sense. Bonds, to finish off the discussion for this morning. Bonds have been pretty straightforward for us today. There's a short-term view and there's a long-term view, which we must try and understand a little bit about. The short-term view, very, very short-term. Let me just think about what happened on the short-term. In the short-term, there was a lot of short value available. So in the short term, there was a lot of short-term value available, selling into the high prices, selling into these uptick phases here. There was a lot of opportunities to get that short trade on. Got a good rapid response to this. We had a bit of value divergence into today's lower lows. You can see there was a divergence in value there because that's a pretty much an equal to low, and the price is pretty much a significant lower low. There was a lot of volume coming in there as well, so I started to buy into that. And then we got a failed auction. We got a second leg lower. And we have a big macro buy trade down just below the 55.16s. I think it started at 14s, if I'm right. Yes, it started at 14s. So there was a macro buy trade at 14s that I was very keen on. Since then, we got a small value divergence to go short into this area here at 8s, and we've had a very reasonable sell-off. You can see that as we got that sell-off, a little pullback was worthwhile taking a pop at. I haven't got the arrow in, but we took a little pop at that. That has subsequently been scratched out, but I'll definitely be keen to go again into this narrative. Now you might be saying, how were you able to buy into the bottom edge here? Why was that even a thing? Because the short-term value looks really quite bearish. So why was that a thing? The wonders of a roller button on your mouse, right? So yes, it does look very bearish, doesn't it? It absolutely looks very bearish. But the wonders of a roller button, let's just see how bearish that bottom edge really is, guys. Let's see how bearish it is. Oh my goodness. The wonders of a roller button, right? Look at the difference in the value now, guys. Do you see that this is a very, very interesting buyable proposition at the bottom edges? It's not exactly hidden from view, is it? So the wonders of a roller button. Take a look at the bracket. So where was the high of the bracket? Where was the low of the bracket? There was the low of the bracket. There was the high of the bracket there. Where was my sell side target price? My sell side target price was 14s, 15s, right? 14s, 15s. So when we come into that 14s, 15s area, what else am I seeing? Take a look in the background. What is this over here? A bullish order block, right? So we've got a bullish order block in the background, which we can mark up probably to 155.16's area. And we've got a measured move in a bracket down to 155.16's area. And we've got macro value in the 155.16's area. And we've got a guaranteed discount into the 155.16's area. We've got an awful lot going for this buy trade, haven't we? So whilst when you zoom in, you lose any kind of context to how good that buy trade really was, well, that's a huge blunder on your part, isn't it? If you've missed out on that storyline because you didn't look at the bigger picture. Now remember, when we look at the bigger picture, it's always a good idea to also check out some of the other outside market divergences. We look at the dollar, for example, we can see the dollar is massively divergent against bonds as well. Now, there's obviously a possible hedge opportunity in that narrative. You can see that buying the bond at those lower prices, you'd have been thinking to yourself, well, the bond is going to go up and the yen is probably going to go down in terms of a relative value narrative. And sure enough, the yen has gone lower, the bond has gone higher, so you've made a lot of money on that spread if you took it. So that would have been a great spread for you to take advantage of, wouldn't it? If we're looking at things like commodity prices, you can see one of the reasons why we got the sell-off in the first place. We got a strong pop on commodity prices. You saw that for yourself, so that drove down the price. But that divergence creeping back into commodities, in this case this is copper, that divergence creeping back into commodities give you the perfect opportunity to just get that short-term inflation narrative back on side and make some easy money off the bottom edges. Perfect example, right? Perfect example. So there's an awful lot we can look at in terms of these narratives. If we do the work, if we put in the necessary graft, this was an easy day in oil. Anybody that's got an ability to draw a measured move, so we got structure breaks. It doesn't matter where you go from your structure. You might be saying, how do you know it's that structure from there to there and then the break? Well, we've already covered that in the classroom. The price that when it breaks, you look at the last time the price was there, if that's what the break is that you're using, and then you find the high price, and that's it. As soon as you find the high price, you've now got your target price, which is 14s, 155, 14s. And from 155, 14s, you're now inside of that halfback, not halfback trade area. You're now inside of that bullish order block area there. You've got massive value divergence in this, massive value divergence in this as a storyline. And you want to try and take advantage of that, but the drive on commodity prices would have stopped getting you too involved. And that's obviously the reason why these buy trades in this earlier stage here at 9 o'clock didn't really work out. Because the drive on commodities kept going. You can see that for yourself. The drive on commodities was brutal, and therefore the buys were perhaps a little bit too early, and obviously that's resulted in a sell on the commodities, and it's resulted in a buy on bonds on the retest of the bullish order block at the bottom edge. Is that not dead obvious? I think so. I think it's an incredibly obvious narrative. I think it's a very, very clear storyline, and it's a storyline that we like. It's a storyline that I'm still working in terms of sells and buys. And you can see that that last sell getting scratched out, you can see it's came back up into that high price. Still brilliant, interestingly good value in that trade narrative. And you're still able to keep working it. Again, the only downside for this trade is that big drive against you against commodity prices. So if that doesn't turn back out, the chances are that sell is going to get scratched and we're going to have to just try again somewhere else. Pretty straightforward? Yeah, pretty straightforward. Pretty straightforward. So let's get through Friday's numbers. Let's see what Friday's numbers had for us. Again, it's a Friday, so there's obviously a lot of data usually on Fridays, and today's no different. So we'll get through this. Unemployment rate in Japan came in a little bit hotter, a little bit colder, really. It depends what color is hot for you. Anyway, it came in at 2.6%. The forecast was for 2.5%. The CPI in Japan also came in at 2.3%. They were forecasting 2.2 up from 2.1. So inflation starting to show up in Japan. And that's not a good sign because the Japanese hate any signs of inflation. Consumer confidence numbers out of Japan also took a bit of a beating, 30.2 down from 32.1, missing expectations. And finally, housing starts also got a miss, expecting a drop of 1.6. They came in at a drop of 2.2% on housing starts. French GDP numbers came in a little bit better than expected at 0.5 against a 0.2 expectation. French consumer spending was the majority of that GDP number, coming in at 0.2 against a forecast of -1. So French numbers looking relatively bullish at the beginning of this morning's London session. Elsewhere, UK money supply did shrink because M4 money supply shrank from a prior of 0.6 to a -0.3. Mortgage approvals were in line with expectations, as was net lending pretty much in line with expectations. The Eurozone flash CPI inflation number, however, did come in a little bit punchy at 8.9%, 8.6 prior, 8.7 forecast. The core number also a little bit punchier as well, 4% against a 3.7 prior, and that was obviously the main numbers from the London session, was those European CPI numbers coming in that little bit punchier at 10 o'clock. Now, obviously, the good news was we were already short the bond coming into those numbers, weren't we? So at 10 o'clock, we were already short bonds because of that value divergence. Great news, because then we got that extra bit of follow through. Coming into the US session, which is in 4 minutes' time, we do have a very, very important number for the Fed. It's the core PCE price index numbers. The core PCE, the reason why it's important, we've covered this many times in the past, is just because it's a little bit more timely for the Fed. It gives us a little bit more of an active look at inflation, and therefore the Fed does pay very close attention to this number. It's forecast at 0.5, the prior was 0.3. This is a bond moving index here, So this is going to be something that's going to move the bond market, so just be aware of that as a storyline. Get ready to act if you see an opportunity, and something to, as I said, something to be looking forward to, but something to be aware of if you're in a bond trade at the moment. Make sure you're aware that there is a big number coming out, and it should have a market impact. Forecasting 0.5. 0.5 is the forecast. Prior is 0.3. Numbers out in just 3 minutes, guys. 3 minutes. Other numbers coming out this afternoon, we have 245 Chicago PMIs. That's obviously going to be coming out. We're seeing a bit of Baltics coming in now in the bonds at 16s. So I'm going to be aware of that coming in. Okay, so Chicago PMIs, 245 expected, 55.1 down on the prior of 56. And the University of Michigan consumer sentiments to finish off the week at 51.1. The prior was 51.1 as well, so no change expected there. So bonds on an uptick at the moment. Value certainly on the short side at the moment. So I am looking at that from the short side, and we're waiting to see if that is a sweep to try and get people off the short trade. We will find out soon enough. And the numbers out in just 2 minutes, guys. 2 minutes for the numbers. Have a good one. I'm going to grab some lunch. I'll be back in 10.